Hey everybody, Shah Gilani here with your weekly BTNT, as in buy this, not that. I want to talk about a couple of steel companies today. Why? Because steel, once again, is in the news. And this time, it's in the news because the US and Mexico seem to be getting closer to some kind of deal that would lower the tariffs on steel coming from Mexico. So some of the steel stocks that have popped are reacting today. And of course, it remains to be seen because we know with a lot of the Trump tariffs and walking back of those tariffs and the extensions and the pauses and all that stuff and the ongoing negotiations, we're not sure where things are going to go. But steel is in the news. So I'm going to start with Cleveland Cliffs. Why Cleveland Cliffs? Because it had a heck of a pop recently. Now, Cleveland Cliffs is has been in an awful slide, and for I think good reason. But it was in the news a couple of weeks ago because it's a steel company that, in the light of tariffs, might do better. But the stock wasn't doing well until all of a sudden, wait a second, maybe heavy tariffs on imported steel would resurrect the likes of a Cleveland Cliffs. So Cleveland Cliffs CLF, I'm going to pull up the chart on this to show you how ugly it actually is. Cleveland Cliffs, people, has had just a terrible run. So here's the chart of Cleveland Cliffs. Now, again, see, this is a 2-year chart. So if I go to a 1-year chart, this is how ugly it looks. Pretty ugly slide. So the problem with Cleveland Cliffs, and to me, it's not a buy because yes, it had a pop. And I'm looking at down here. So this low, really, this is how ugly this was. This low was on May 30th, 2025. So it's just a recent low. And then when the market opens up, that low close had Cleveland Cliffs closing at $5.83. Then the next open, the stock screams up, gaps up, and closes at $7.18. That's a 23% gain off the bottom. So as ugly as that is, oh, excuse me, allergy season for me. That looks like a pretty cool gap, but looks this is bottom fishing, people. And by the way, when we got to the high here, the stock had a tremendous up. It was up 37% off of the lows. Again, those lows, $5.83. So yes, that's an impressive pop, but all things being equal, this stock is down from its intraday high back on April 4th of 2024, which was about just a shade under 23 bucks. It was 22.97. It's down at yesterday's close 65%, people. All right, 65%. We'll call that in a year. That's ugly. It was down 74% at the lows, which were just right back here the other day. So Cleveland Cliffs to me is not a buy in spite of the fact that maybe it would do better if tariffs were imposed on steel exporters around the country and we don't get flooded with steel here. But looking at Cleveland Cliffs on its own, I'll give you a couple of ugly numbers. This is a not a well-run company. It's got steel. Cleveland Cliffs has revenue, people, of $18.61 billion. Profit margin minus negative 6.35%. Operating margins negative 10.33%. Return on equity negative 16.34%. Horrible stuff. Balance sheet, $57 million in cash and balance sheet versus debt of $7.62 billion. Operating cash flow, trailing 12 months, negative $388 million. So no, yes, it had a pop, but no, it's not a buy. The other stock I'm going to compare it to is Steel Dynamics. STD, excuse me, STLD. STLD, Steel Dynamics. Yes, it's in the steel manufacturing business. It does a lot of similar stuff to what Cleveland does, but it also has a recycling business, which I also like. So it's if you look at this stock, it's gone sideways, people. So yeah, I think it's definitely a buy here for a lot of reasons. Cleveland Cliffs, no. Steel Dynamics, yes. Why? I like their mix of business better, number one. But Steel Dynamics, it's a $19.86 billion market cap. Revenue $17.22 billion compared to Cleveland Cliffs got more revenue at $18.62 billion. The profit margin for Steel Dynamics is 6.8% versus Cleveland Cliffs minus negative 6.35%. So operating margin here, positive 6.3% versus Cleveland Cliffs negative 10.33. Return on equity here for Steel Dynamics, 13.2% versus negative 16 plus percent for Cleveland Cliffs. Cash here on the balance sheet, $1.21 billion versus Cleveland Cliffs, $57 million in cash. The debt here, 4.2 versus billion, that is, versus Cleveland Cliffs debt of 7.62 billion. Operating cash flow for Steel Dynamics, $1.64 billion trailing 12 months versus negative 3 make it $388 million for Cleveland Cliffs. So yes, not a great looking chart, but above the moving averages. And if you're going to buy a steel company in the US, buy Steel Dynamics, don't buy Cleveland Cliffs. Yes, it had a pop, but where's it going? Nowhere. It's Steel Dynamics over Cleveland Cliffs any day. Catch you guys next week. Cheers.